Did a single government sentence just cost the world $55 billion? That is exactly what happened when United States Treasury Secretary Scott Bessent said the government was not going to be buying Bitcoin for its strategic reserve. In less than 1 hour, a tidal wave of panic hit the markets, and Bitcoin's value shrank by over $55 billion. But in a stunning twist, Bessent reversed himself. Hours later, he clarified that the Treasury is still exploring budget-neutral pathways to buy more Bitcoin, leaving investors and rivals around the globe utterly confused. Why did one official's words cause such massive chaos? Because the United States' real Bitcoin strategy is clouded in mixed signals, political hesitancy, and fiscal paralysis. While the White House promises to make America a Bitcoin superpower, the truth is that every statement from Washington can move markets and your money with breathtaking speed. If you do not understand these power games, you could lose money to volatility, miss out on the next big crypto move, or fall behind as other countries snap up digital assets at America's expense. So how did we reach this point of confusion, and what is really going on behind the scenes? Let's rewind and break down how the Treasury's conflicting messages are shaping the future of Bitcoin, the market, and your wallet. To understand this chaos, we need to look back at the dramatic moments that led up to this week's market-shaking statements. Let's unpack how a single comment triggered global panic, and why America's crypto policy is so unpredictable. Imagine waking up to a single cryptic tweet from a Washington official and watching billions wiped from crypto markets before you finished your coffee? That's the new reality, where every word from the Capitol can make or break fortunes overnight. Miss a signal here and you could lose out on game-changing opportunities or get blindsided by massive losses. So how did we arrive at this razor's edge? To grasp the roots of today's chaos, let's rewind to just a few months ago. On March 6th, President Trump shocked the world by signing an executive order to establish a United States strategic Bitcoin reserve, an audacious move designed to shield America's financial future in the digital age. The plan was ambitious. Start by using Bitcoin seized in federal criminal cases, then perhaps ramp up and buy more, building a cyber fortress brick by brick. But bold ideas quickly gave way to uncertainty. Weeks dragged into months, and instead of clear action, the market got only veiled hints and mixed signals. Treasury Secretary Scott Bessent teased that the administration was still exploring budget-neutral pathways to acquire more Bitcoin, but specifics were scarce. But what does budget-neutral actually mean for you and your wallet? In short, the government wants to grow its Bitcoin stockpile without touching taxpayer dollars or adding a cent to the ballooning federal budget. The options on the table, using already confiscated Bitcoin, issuing gold certificates, or diverting tariff revenue, might sound clever, but each one is a political and financial minefield. This endless exploration has become the market's favorite roller coaster. Bessent's flip-flopping, one day dismissing further purchases, sending Bitcoin's value plummeting by billions, then hours later, reversing course and reassuring everyone that the plan is still on. Every twist turns the market upside down and leaves investors scrambling. So far, the only Bitcoin entering the reserve comes from criminal case forfeitures, not open market buys, and even these moves are hampered by law. The Treasury can't launch most buying strategies without Congress signing off. Senator Cynthia Lummis has called for urgent rule clarification, but political infighting keeps the system stuck in neutral. Here's why you can't afford to tune this out. If you're not tracking the real mechanics behind these headlines, you could fall for rumors, miss crucial market shifts, or make mistakes that cost you dearly. The stakes are enormous, not just for day traders or crypto whales, but for anyone betting on America's digital future. The confusion is more than just bad PR. It reveals a deeper, urgent question. Is the United States ready to take decisive action in the era of digital assets? Or are we watching a dangerous game of delay that could let global competitors seize the advantage? So, how did this high-stakes game of uncertainty become the new normal? Let's break down what's really happening behind closed doors and why it matters for everyone. Is the United States Treasury's indecision a calculated chess move or a flashing red alert for every American investor? Blink, and you might miss a shift that could cost billions or hand a generational edge to America's global rivals. At the core of this crisis is a stunning contradiction. The government trumpets its promise to make America a Bitcoin superpower, yet its top officials can barely keep their stories straight. Picture this. Treasury Secretary Scott Bessent announces there will be no fresh Bitcoin purchases, and in less than 60 minutes, over $55 billion in Bitcoin value vanishes. Then, mere hours later, Bessent pivots, claiming the Treasury is still exploring so-called budget-neutral ways to add more Bitcoin to the nation's reserves. What looks like a simple walkback is actually a siren for everyone with a stake in the market. The world is hanging on every word from Washington, and this whiplash is turning risky fast. In the space of a few statements, Bessent's abrupt turn sent Bitcoin plunging from $121,000 to just below $119,000 before dropping even further. This is more than numbers on a chart. This is real money, real confidence, and America's reputation on the line. Industry leaders are bluntly calling out the pattern. The CEO of Brains, a top Bitcoin mining firm, asked, "Are you still exploring after all this time?" Max Kaiser, an advisor to El Salvador's president, called the dithering avoidance, plain and simple. Frustration is mounting across the digital asset sector. After 5 months of promises, there is still no clear plan, no timetable, and no transparency about how the president's bold Bitcoin pledge will be delivered. The official Digital Asset Working Group report, released just weeks ago, was supposed to provide clarity on next steps. Instead, it offered nothing but dense jargon and vague suggestions, no concrete actions, no true reassurance. The Treasury clings to ambiguous buzzwords like budget neutral and proposes using confiscated Bitcoin as a stopgap, while meaningful purchases remain stalled. The uncomfortable truth? Political gridlock and fiscal deadlock are tying Washington's hands, threatening to erode America's leadership in digital assets. But here's what most people are missing. The stakes are rising by the day. Every moment the US falters, rivals like China or ambitious crypto nations are making moves. If they seize the initiative, they could lock in pivotal advantages in the global digital currency race. Investors could lose billions more in sudden price swings, while American innovation and influence slowly slip away. So is this a master plan or just chronic indecision? Right now, it looks like paralysis. The longer Congress and the White House squabble over details, the bigger the risk that America gets left behind, and everyday investors bear the brunt. But how did we get here in the first place? Let's rewind to the moment this crisis truly began. Could America's slow-motion Bitcoin policy become a ticking time bomb, handing the crypto crown to China or El Salvador? This is no longer just a theoretical risk. Hesitation in Washington could mean catastrophic losses for investors and a permanent blow to American influence. Let's break down what the next chapter could look like. First, suppose the United States acts with conviction. If Congress and the Treasury finally join forces to secure budget-neutral strategies for acquiring more Bitcoin, America could expand its strategic Bitcoin reserve far beyond the current level of nearly 200,000 coins, now worth over $23 billion. Such a bold move would send shockwaves through the global market, likely boosting investor confidence, solidifying the dollar's digital reputation, and opening new doors for individual investors. But it could also trigger a dramatic price surge, making it harder for smaller players to keep up. Now picture the opposite, continued gridlock. Every week brings a fresh Treasury statement, but nothing actually changes. The United States clings to its confiscated Bitcoin and endlessly debates budget-neutral plans, yet months pass with no real progress. In this scenario, market instability worsens. Remember, just one Treasury remark recently erased almost $55 billion in Bitcoin's value in under 1 hour. Investors are left in suspense, and America's standing as a crypto leader slips further away. The most dangerous possibility? The United States gets leapfrogged. El Salvador has already staked its claim as a crypto trailblazer, and China is moving fast behind the scenes. If either outpaces America, they could lock in generational advantages, attracting capital, talent, and future political power while Washington dithers. As warnings from top analysts grow louder, the message is clear. Delay now, and the United States risks forfeiting not only its financial edge, but also its geopolitical clout for decades. For everyday investors, the stakes are personal and immediate. Missed action could mean smaller returns or being blindsided by wild market swings sparked by policy confusion. On a larger scale, the next era of tech innovation and investment could shift overseas, leaving Americans and their portfolios trailing behind. So what can be done to break the deadlock? And how might Washington pivot before it's too late? Let's look at the options on the table. What can you actually control when the world's most powerful economy cannot make up its mind about Bitcoin? First, you need to become a master signal reader. Notice the difference between real congressional action and headline whiplash from the Treasury. For example, Secretary Scott Bessent first declared the government would not buy more Bitcoin, only to reverse course hours later and say that budget-neutral options are still under review. This single flip-flop wiped tens of billions of dollars off the market in less than 1 hour. So how do you spot real movement? Watch for actual bills, like the Bitcoin Act, championed by Senator Cynthia Lummis, starting real debates or votes in Congress, not just talk from administration officials. History shows that markets often overreact to surface-level statements, but meaningful change comes only when legislation starts moving. Brain CEO Eli Nagar put it bluntly, at some point, exploration without execution starts to look like avoidance. Second, avoid anchoring your strategy to political promises or hype. Policy reversals are nothing new. Just look at past crypto or even energy policy U-turns, where early signals ended up reversed or watered down after pushback or fiscal concerns. Remember, Secretary Bessent's latest statement means the U.S. may keep holding Bitcoin seized from criminal cases, but fresh purchases could still be months or years away, depending on Congress. Third, position your portfolio so you are not at the mercy of these policy storms. Experts at Blockonomy and Investing.com point to diversification and risk management as your best defense. If you go all in on one scenario, like the U.S. suddenly ramping up Bitcoin buys, you risk getting whipsawed by the next reversal. When the rules can change overnight, keeping a balanced mix of assets and setting risk limits is non-negotiable. In high policy risk environments, speed and flexibility matter more than guessing the next government headline. The winners are those who adapt quickly and do not let their portfolios get trapped by indecision or noise out of Washington. If you fail to adapt, you risk letting politics, not fundamentals, drive your financial future. So, what is the bottom line? How should you think about the U.S. government's Bitcoin saga moving forward? Let's distill the deeper truth beneath all the noise. The real moves in Bitcoin happen before the world realizes, or before the government admits what is coming. We have just witnessed this in real time. One statement from the US Treasury suggesting no new Bitcoin buys wiped nearly $55 billion from the market in less than 1 hour. Then, almost immediately, the same officials reversed course, leaving everyone from investors to national rivals guessing what America will actually do next. This is not just confusion. It is a preview of how power over Bitcoin will shift quietly, long before the headlines catch up. While the Treasury talks about budget-neutral strategies and Congress debates legal pathways, other countries are already front-running the U.S., locking in their own reserves, while America lags behind its own ambitions. If you wait for government clarity, you will always be too late. The decisive moments, the entry points that build real wealth and power, happen while the officials are still exploring options. El Salvador moved early and secured a global spotlight. Now, as the US dithers, other nations are watching for their chance to leap ahead. The true lesson is this. Just because the world's biggest government is making noise, do not mistake it for progress. The ones who anticipate these shifts, who act before consensus forms, will shape the future of digital assets. Everyone else will be left reacting to yesterday's news and missing their chance. But what does this mean for those paying attention now? The next move is not about headlines, it's about strategy.